How is everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to bring everybody a review of ICBA's brand new check fraud detection guide. And I'm hoping that this will provide some really good information on everybody as we all try to combat the major fraud issues that go along with check fraud. So let's bring up the guide here real quick and take a look. So I kind of gave you this bigger view of just so you could kind of see the front page here. So this is from the ICBA, the Independent Community Bankers Association, and this is their check fraud detection mechanisms as of October 2024. So let's zoom in first, and then let's scroll down and take a look at what's going on here. So what does the introduction say? So this document explains some of the potential technology solutions and operational mechanisms that are available to community banks to detect instances of check fraud. It is intended to be brief and to serve as a reference for community banks to evaluate tools and leverage internal practices to identify and prevent check fraud. Effectively detecting check fraud requires a layered approach that combines both software and manual processes. Every community bank's approach will differ and should be guided by deliberate strategic planning that incorporates a cost-benefit analysis of all available mechanisms, a historical loss analysis, and the parameters of each bank's compliance program. This document was developed by community bankers working together as part of ICBA's Check Fraud Task Force. This document is for general information purposes and is not intended to be and should not be taken as legal advice and endorsement of any specific company or product or a comprehensive treatment of the subject matter. So first up, we have technology solutions. We have Positive Pay. So what is Positive Pay? I actually covered Positive Pay a little bit in past episodes, but Positive Pay enables customers to compare checks that post to their account with checks that they have written. This can help to prevent check fraud losses by proactively alerting customers to discrepancies when checks clear, enabling fraudulent checks to be returned to banks of first deposit in a timely manner. Customers, how does this thing get used? So customers enter the information, including the payee and amount about each check they write in their online banking platform or using a third-party interface. Customers then receive alerts when posting checks do not match the checks they entered. Customers can then choose to return or to pay a discrepant check. I will tell you, Positive Pay is an awesome system. It is a great thing. If your bank has Positive Pay, definitely go talk to them about it. Usually it would probably be offered through their cash management services. If you haven't checked out my episode on Let's Talk About Cash Management that I just did a couple weeks ago, you definitely want to go check that out. I go through a whole list of cash management, treasury services type products, including Positive Pay and a whole bunch of other things. So good information there. But Positive Pay, it does cost money. You do have to pay for it, but I think if you're a small to medium sized business, even if you're a big business and you don't want to risk check fraud or maybe customers or even employees doing crazy things, writing out bad checks, Positive Pay is a great solution for that. Okay, next up is Check Image Analytics software. Check Image Analytics software analyzes check images to detect alterations or other indicia of fraudulent, if I'm saying that correctly, indicia of fraudulent checks. Like the software looks at a variety of characteristics of a presented check, including payments of lines, fonts, images, layout, and size. This software sometimes makes use of artificial intelligence to enable its analysis. So basically, tellers or back office personnel run each check presented to the bank through the analytics software. The software generates alerts and or a risk score if there are discrepancies between the check being presented and checks that have been historically presented by a particular customer. Banks can choose to further investigate, return, or to pay a discrepant check. So now this would be a software that would be purchased and used by the bank. So this would not be, I would not think, something used by the customer. This would be something more for the bank, where the bank is taking those checks that are presented, running them through this software program, and basically, trying to determine, okay, are these things on the up and up? And then we go down. So we go to check image analytics software to check validation software. So check, and this would be check validation software enables bank personnel to validate check information using a repository that aggregates information from multiple financial institutions. The software looks for checks that have been reported as altered, duplicate, or returned, as well as for accounts that have been reported for non-sufficient funds or as closed. So again, tellers or back office personnel enter the routing number, account number, check number, and dollar amount into the software. The software generates alerts and or a risk score if a check has already been presented or an account has been flagged. Banks can choose to further investigate, return, or pay a flagged check. So again, software that would be used by banks for validation, for validating checks. And then we get into the Fed Payments Reporter Service for Checks. So Fed Payments Reporter Service for Checks provides banks with a variety of reports that deliver advance notice of checks processed by the Federal Reserve banks. The reports include information such as banks of first deposit information about forthcoming returned items, paying banks information about forthcoming large checks for settlement, and corporate customers information about checks the morning they are presented. So interesting service there for Fed payments. And then finally we have the Treasury Check Verification System, the TCVS. So the Treasury Check Verification System enables banks to verify a U.S. Treasury's checks validity. So checks coming from the U.S. Treasury. Okay, and then we get into operational mechanisms. So we have like check review, and then this is where it gets into a more manual review process. So basically, banks can manually review presented checks. Completing these reviews may help banks identify checks that are fraudulent or those where the payee's name or the dollar amount have been altered and may impact hold timelines. I would like to think that a lot of banks are actually, if not most, if not all banks are actually already doing this. I know that pretty much every bank that I have ever worked at does this, where they're, manually reviewing the checks as they come in. The tellers are looking at them. If they still have head tellers, maybe the head tellers are looking at them. Assistant managers could be looking at them. Managers could be looking at them. And then certainly the back office people would be looking at them as well, in risk management or anybody that maybe in the BSA or AML department, that kind of thing. But again, what's the deal with the manual process, though? It's manual. It takes a lot of time. People have to really look at it, and you have to know what it is you're looking at. And banks get books that basically display all different kinds of checks, different size, patterns, variations, different things on it. So if you have a question about a check, I mean, they definitely have different types of books that you can go and reference, that you could say, all right, what's the kind of the size, shape of this check seems to be a little off, coloring, marks, different things on here don't seem to jive. And then you could kind of check them out and cross-reference them. But I think it's one of those things where it's like, if you look at enough checks, I would say 9 times out of 10, when something that is fraudulent comes in, you're going to be able to pick that out. You're going to be able to look at it, and right away you're going to be like, I don't know about this. It's kind of like a bartender looking at IDs. You see a couple hundred, maybe even a couple thousand IDs. When somebody rolls in with a fraudulent ID, you're going to probably pick that out pretty quick. So kind of same kind of thing there. But like I said, you got to know what you're looking at. Check cashing limits. Banks and or their customers can place limits on the checks they cash. Restricting check cashing may help to reduce banks' risk exposure to potentially fraudulent checks and provide an opportunity to scrutinize certain checks. It is important to balance any bank-imposed restrictions with the risk of lowering customer satisfaction. Yes, again, I would like to think that most banks would do this. I mean, if you're, cashing, if you're cashing a $10,000 check, I would hope that, the bank would probably make, a couple $1,000s of that available to you right away. Would probably say, hey, this has got to wait, 3 to 5 days for the rest of this check to clear through. That gives the bank a little bit of time to kind of go through there and make sure that everything is okay, And then new account reviews. Banks can apply heightened scrutiny to check related activities related to newly opened accounts. New accounts are potential vectors of check fraud. Yes, they are. So reviewing checks deposited into or drawn from new accounts could enable banks to detect check fraud. Yes, I think that pretty much, I would like to think that, again, most banks, if not every bank, is doing at least some kind of a like kind of a 90-day period where any new accounts that comes in, they're kind of checking them a lot more carefully, scrutinizing activity and things that are going through there, just to make sure that everything's kind of on the up and up. And so that's basically it. So again, just to kind of recap here, so operational mechanisms, they have check reviews, check cashing limits, new account reviews. And then on the technology side, we have Treasury check verification system. We have Fed payments reporter service for check. Then we have check validation software. We have check image analytics software, and we have positive pay. So that's basically, that's it. That's ICBA's. That is their new, check fraud detection mechanisms guide for October of 2024. I would just say in closing here, wrapping up. So in conjunction with this episode, if you haven't seen, like I said, some of the episodes that I posted up on like deposit strategies, on let's talk about cash management, or let's talk about treasury services. If you haven't seen any of those episodes, I highly recommend go back, check those episodes out. All this stuff kind of ties in together to a certain extent. Check like I said, check them out if you haven't checked them out. But I'll wrap up with, if you like this episode, please give me a thumbs up there. Make sure to like, share, subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. Make sure to check out some of the other content on the channel, and I will be back to see everybody again real soon.